Hello, and thank you so much for joining me for the fourth episode of the series Green Sofa Dialogue. Today we'll be looking at green finance, and I am joined today by Dr. Rhian-Mari Thomas, who is the Chief Executive of the Green Finance Institute, and Gerard Reid, who is the co-founder and partner of Alexa Capital. Rhian, Gerard, thank you both for joining me. Hello.
Hello, delighted to be here.
Great to be here.
So today we're going to be taking a look at how we can respond to the COVID-19 pandemic from a sustainable finance point of view. But in order to do that, I'd like to ask you both, what is green finance? Rhian, would you like to start?
Be delighted to start there. I think that's absolutely the right question, because there is no defined or definition for green finance. I like to say that green finance is the application of climate science to finance. It's about embedding what we know about climate based on the science, based on the climate physics, into our everyday financial decision making. And that all sounds rather grand, but what it actually means in practice is that green finance isn't a separate asset class. I think I'd like to make that point clear. It is all of finance. It can be every type of different financial product, but which has an environmental lens. So a mortgage can become a green mortgage if it's a mortgage that is on a building that is more energy efficient or resilient. And similarly, a sovereign bond can become a green sovereign bond if its use of proceeds are going towards climate action and increasingly also towards supporting social impact.
Gerard?
Yeah, well, I think what disturbs me about the word green, and it's not just green, it's sustainability, it's renewables, there's a whole pile of words we're using in this area, and nobody's really clear what they mean. So, and I think that's an issue that we actually have to deal with going forward, is what it is. I was looking earlier on at the Dow Jones Sustainability Index, and I was looking at the companies on them, and for me, I wouldn't call, I think probably 90% of the companies on that list, for me, would not be green companies, right? But I think the reason this is also important is it's a huge amount of money that wants to go green, but they're not really going green. That's the fear I have. The money's going into other areas.
I have an issue with a little bit this waiting for the perfect set of definitions. I think on the whole, we've got a pretty good idea that, fossil fuel financing, the need to transition some of the harder to abate carbon intensive sectors, it isn't beyond the wit of most of us to figure out what shades of green look like, even if we haven't fully defined what, aspirationally green looks like. And it just concerns me sometimes that a genuine fear of greenwashing or a fear of actually changing the status quo, we're giving people a little bit of an out sometimes by saying, let's wait until we have the fully regulated, fully accepted set of definitions. I think there's an awful lot that we can all be doing to bring the market by osmosis while we wait to get those definitions.
You're right on that. I suppose that the reason I've been in sort of this, we call it green financing. I've been in this area for 15 years, right? As an asset manager, an advisor, and an analyst. And I've been really careful using the word green. And the reason is, if I'm in the United States in particular, and I'm speaking to an oil and gas company and I say the word green, they immediately think that I'm a left-wing socialist, right? And if you really want to push sustainability going forward, we have to move beyond that. And I think change the language. So when I talk to finance people, I now talk about risks, and I talk about innovation and the changes that are going on in the world, which are inevitable, right?
And I think we can welcome the language around transition.
Yeah.
Because to your point, in order to meet the goals that we do need to meet in order to avoid climate breakdown, we need those harder to abate sectors and those fossil fuels companies to transition to zero carbon. The one thing I would say is, when we set up the Green Finance Institute a year ago, we obviously had some discussion about what we should call ourselves. And I spoke to a few people and they were quite surprised at the concept of finance and green being in the same sentence. And that's what actually, notwithstanding your point about it has historically had some sort of connotations with, knitting your own porridge, which may not be entirely helpful in the hard-nosed world of finance. But I actually thought it would be helpful for people to query, what is it that finance can do when it comes to green and the environment? And I know we're going to be getting onto some of these topics later, but I think one of the things that we've seen started to change in response to the pandemic and the tragedy of COVID is we're now talking a lot more about green recovery in a very, in a focused, we're using the language of economics and finance. We're talking about innovation. We're talking about how we invest in order to create jobs. And I think that's a really welcome move forward from those sort of earlier connotations that green really didn't have to do with business, economy, and prosperity.
Yeah, I think what I'd add to that actually is I think there's been a big change in the last 12 months. So I now use the word green, where for the previous 15 years I didn't. And there's a change among policymakers. There's a change of perception among the average man on the street, and within the finance industry, there is a big change. So I recently had to give a talk to a group of US Republicans, and I quoted the chairman of BlackRock, which is the largest financial asset manager in the Western world, which is, climate change is a reality. It's going to have a huge impact in the finance industry. And it's basically a big risk for our whole economic system. I mean, it's brilliant to have people like that coming in, because they allow you to call yourself the Green Finance Institute, where I think 2-3 years ago, you might have had second thoughts about using the word green.
I think you're right. It's a moment in time, isn't it? And all thanks to Larry Fink and his leadership on some of this by, pointing out that the whole financial industry does need to go through a fundamental shift in response to what's happening to climate change. But I think maybe in a few years' time, the green label, we won't need it anyway if we do our jobs well enough, Gerard, and that, green finance will be regular finance.
I think you're right. I think you're right.
So maybe we'll have a different problem in a few years' time. We'll have to rebrand.
So Gerard, you just said that you have changed the way that you speak in the last 12 months, in the last 6 months, or more specifically in the last 15 months since COVID-19 was declared a pandemic. What else has changed? Has this become more of a wake-up call for how we look at finance?
So it didn't start with Corona. It started before that, right? I think really what Corona has done is speeding up the whole process, the change process. If you think of it just in terms of the oil and gas industry, we've never seen negative oil prices, right? That's where I'm paying you to take oil away. So if you're an oil company, you're getting a picture of what happens when you get towards peak demand. And as a result, you're seeing BP and Shell as two examples, and Eni, the Italian oil company, sort of reacting very quickly to this and making asset write-downs, and also restructuring their business because they see what's going to happen in the future. And they're also under pressure from the financial markets because the financial markets are also seeing it as well. I mean, if you look I say to people who talk about energy, I said, we've been in a depression in the energy world for the last decade, right? So stock prices of oil and gas companies and utilities have just fallen for a decade. People do not want to invest in this area, right? Because they go, oh God, it's risky and it's, and it's not fun, right? That's what I'm certainly seeing in it, and I think there's going to be a big change going forward. I think it's actually going to speed up now and accelerate. Actually, I think in the next few years.
Rhian, I see you nodding.
Yeah, well, because I fully agree with the points Gerard's making. I think we were both at Davos earlier this year, where for possibly the first time, climate change was really dominating that agenda. And obviously it was a fantastic start to the year, thinking that this really is the decade of delivery, thinking how we're actually really going to tackle emissions, how we are going to, transition our economies to net zero. I think what the COVID-19 crisis has done is that it's really aligned public interest concerns across Europe in particular with the climate agenda like never before. So we really are looking at that integration of the E, the S, and the G, the environmental, the social, and the governance, in a way that is really, really elevating the dialogue and focusing both policymakers and the private sector in focusing on these issues.
Yeah, I think also from, as I said, I've been in sustainable finance for 15 years, but I actually don't live a very sustainable life, actually until Corona came around. And the reason is I spent the last decade commuting back and forth to London. And I also go to clients. So if I look at the amount of flights that I go on a year, it's probably about 120 flights a year. I should have been a pilot or something, right? But I'm in the finance industry. Now, I haven't been in a plane since March. And actually, I would say that the way I'm working is much more efficient than it was before. And it's better for the environment. And I'm speaking to a lot of people, executives across business, across the world, and they're all having time to reflect on how they live. And also they're looking at their kids and saying, okay, yeah, there's something happening here. What can we do? So I really believe that that the corona that's why I think it's going to accelerate this transition because the people are thinking in a different way, right?
If it's personal confessions time, I actually have always tried to minimize my flights, and that sounds like a very grueling schedule you had there, Gerard. But I've never owned a car. But as a result of coronavirus, I am now going to buy my first car. It's an electric vehicle, so I'm very excited about that. And I'm going to have a few driving lessons because I don't think I've driven anywhere for about 20 years. And so I'm having a first-hand experience of some of the finance packages if you actually want to buy an electric vehicle. And I think there's some work for us to be doing there at the Institute.
Let's talk about this. So you're buying a car. Congratulations. We don't have a car here in Berlin, although we do have a great cargo bike. But let's talk about, some of the things that governments might be doing to get you to buy an electric car as opposed to not an electric car. Let's talk about financial planning on the side of the EU as a result of COVID-19 and the way that people might choose differently to get around the city. What can we look forward to?
Well, I think the electric vehicles is a brilliant place to start this conversation, actually, in that as we're looking at rebooting our economies or actually resetting our economies following COVID, we need to look for these investment opportunities where we can apply both public and private finance to really create new job opportunities, and creating that electric vehicle infrastructure that needs to be in place by, in the UK by 2030, 2035, we're not going to be able to purchase new ICE vehicles, and hopefully by 2040 they'll be off the road completely. But we need to have that infrastructure in the UK and across the EU for us to be able to really have electric vehicle as the main choice in every household. There are currently incentives, but we actually, we've got the backdrop, we've got the clear signaling on this particular issue. But again, the private sector, we really do need to step up and make sure that we are providing the right sort of financial products, the right sort of financial mechanisms for the consumers to make it as attractive as possible. It's going to be a mix of public levers, regulations, incentives, and private capital and private innovation that's going to help us get move forward on that. And then a similar argument can be made about retrofitting homes, one of our big flagship projects at the Green Finance Institute. Again, huge opportunities for creating construction jobs along the supply chain, whilst bringing our homes right across Europe in line with those net zero standards. So I think we welcome very much the steps that have come out of Europe, the plans and the statements that have already been made around the Green Deal and putting finance to work in this space. Let's make sure that it is crowding in private finance wherever we can as well, because I think Gerard made the point earlier, there's huge appetite amongst the private financial sector to invest more in ESG and in green in particular. So let's make it as easy as possible for them to do that.
Yeah, I think what I'd like to say maybe is, because I'm coming from the capital markets side, what the capital markets is very good at doing is putting pressure on companies to change. And I use the example of Shell and BP and their share price falls. But if you're Daimler, Volkswagen, or Toyota, and you see your share price and how they've performed against Tesla, and now you see Tesla is the #1 car company in the world in terms of market capitalization, in terms of value, that's really an eye-opener to boards. That forces change at unbelievable levels. And I think without Elon Musk, we'd be nowhere actually today in terms of the electrification. We need entrepreneurship, and that's where finance actually really plays in a very, very important role by giving capital to people like Elon Musk that can, make change happen and taking it away from people that are too slow to change. You know, and listen, I live outside Berlin, and Tesla's building a factory. I mean, this is a matter of pride for Germany that this factory gets built quicker than the one in China, right? Now, if it doesn't happen, say, for example, because of some planning issue or whatever, it's a complete embarrassment to Germany, really an embarrassment. And that's why he put the factory outside Berlin, because he realizes I've got the German government involved in this, and it's their neck that is on the edge here. I found it very interesting what he's done. And I just use that. We need entrepreneurship, and we need to support entrepreneurs. And that's certainly part of the role that I have in my life, is support these entrepreneurs to take on these incumbents, because it's not easy to take on a company like Volkswagen that's been around for 100 years, or some of these oil and gas companies. Right? And we do have to force them to change. So I want to say that I think the finance industry is doing a good job in enforcing change from these guys.
And that also ties in with the point you were making earlier, Gerard, about shifting in consumer attitudes as well, right? It becomes easier for the financial markets to support companies where there's clear demand for their product. And that's where, that link in with, this is why it requires this whole systemic thinking. It requires the consumers, who are also obviously voters, to start shifting some of their behavior. And that's a bit of a chicken and egg. How do we make it easy? How do we make it financially possible for them to do that? And then how do we actually use that to then support the entrepreneurs, support the shift that we need to see across every single one of the industries? It's not just houses and transport, it's absolutely every aspect of our lives.
And do we have answers to that? To how do we do that? Do we have specific levers that we can say, all right, this is what we're going to do to make sure that the recovery from COVID-19 is done from a sustainable point of view?
I just say, from my point of view, I like the word that was used, which is systemic. We need to take, firstly, a systemic view. If I think of a lot of the rhetoric around climate change, it's very negative. And I try to make it positive by giving the example of Elon Musk. You're smiling, right? We're smiling because you go, hey, it's exciting. This is great, right? That's what we have to do in this area. And to do that, we also need to create what I call win-win situations. So I'm living outside Berlin. I'm producing a lot of my own agricultural produce, and I want to take it a step further, right? And why? Because the other thing I see is that it should be a win-win for agriculture, for the farmer as well. I mean, we use big tractors here. How can you change agriculture so that we have better food, and at the same time make it better for the economy? And that's the thinking that I don't think we've seen that thinking now, but we need to think this is how can we create win-win? Because the more win-win situations you create, the faster the transition can take place.
I'm nodding because I also like to focus very much on the opportunities, the opportunity for finance. It's not just for capital markets. There's obviously a huge opportunity for the capital markets, but also for retail banking, for private wealth. It's a huge opportunity for the whole finance industry to play such an important role. But the private finance industry can't do this alone. So there isn't a single lever. It does need to be a huge collaboration between the policymakers, the public sector, and the private sector. And that's obviously one of our key mandates at the Green Finance Institute, is to sit at the interface between those two things. We're obviously government funded, but we're led by bankers, precisely in order to try and bring those two worlds together and find creative solutions as to what are those levers. And some of the levers we've touched on earlier, we started the conversation discussing nomenclature and the importance of defining green. Work of the EU taxonomy on defining green is, to my mind, a fantastic step forward in helping the markets innovate. I have my own personal experience of having developed a taxonomy in one of my previous roles, which then led to a lot of green finance innovation behind it. So I'm actually a supporter of having a set of definitions, and the EU taking such a great step forward on that. There are other levers, obviously, that are regulatory. Long conversation about, should we be having differential capital weights for loans that are capital that goes towards green or non-green situations? And going back to something Gerard said earlier about, some of the oil companies we're looking at some of the impairments and the write-downs that they're doing, I think we're getting perilously close to the position where we could say some of these companies do pose a greater credit risk. And therefore, maybe we should be thinking differently about how we weight capital that goes towards some of these types of companies. Similarly, we've done a piece of work recently on the Commission for carbon charging, looking at how we could really use a carbon charge or a carbon tax to really support innovation and help some of these companies that need to transition. So a number of different levers that we can pull. Sadly, there isn't one great big green magic button that we can press. It's going to need a lot of granular work. It's going to need a lot of local solutions, and it's going to need that focus on how we pivot a lot of things through a portfolio of actions.
I think that the thing that I would add to that is there's a huge amount of capital in the world today. We've never had as much money actually in our system. And the question we have to ask is, how can we get that capital to really come into sustainability as quick as possible? One of the concerns I have about the various different green deals, whether it's in the US or Europe, is what we're actually doing is subsidizing. That's what we're doing. And if you're a finance guy and you hear the word subsidy, the fear is it's all great until the subsidy goes away, and then you're in trouble. And I've seen this in solar for the last 15 years. People chase subsidies and then they go to the next country, and just one bankruptcy follows another bankruptcy. And some people make money and I don't want to see this happening now with the Green Deal. And the one thing that I think politicians, regulators need to think about is what I'll call incentives. And we need to make sure that the capital is incentivized to go to the right place. And I give you a very simple example. I just happen to be in Germany. I pay 30 cents per kilowatt hour for what is basically 45% clean energy. I've got gas and I'm buying gas at 7 cents a kilowatt hour. Nobody in Germany has any incentive whatsoever to actually renewablize or make green their heating. Nobody, right? So the German government then reacts by putting a subsidy in. Well, actually, that's not dealing with the issue. The issue is that there is an incentive wrong. And my view would be that actually, if you could bring the cost of the renewable electricity down, and at the same time increase the cost of the fossil fuel, then the capital will flow naturally, and you don't need to have these huge big programs to green everything.
We have got some experience now of where things can be done without those cliff edge of coming away from subsidies, and where actually government incentives have been used very successfully to actually prime the market, which then crowds in that institutional capital. I mean, I don't want to sound too parochial, but one of the big success stories that we've had in the UK has been around offshore wind, where now 40% of global installed offshore wind capacity sits around the British coastline. And that's a fantastic case study going back a few years of a number of government interventions, setting up contracts for differences, setting up auctions, also setting up a green investment bank at the time to meet some of the initial reluctance to meet those investment gaps. And now over time, that's an industry that has created a huge number of jobs in sort of Hull and the Isle of Wight and other areas that needed some regeneration. So there's that story too. But is also financed now through institutional investment. So when it's done well, we have got some real examples of how government intervention, government subsidy government incentives can support. But there are many examples, you're absolutely right, of where subsidies have created that bit of boom and bust, and it hasn't provided the certainty or the long-term signaling that's enabled us to really see investment flow from the private sector. Because the one thing I would say is, I often hear, as I'm sure you do too, people saying, oh, there's so much capital, there's plenty of capital for us to solve the climate crisis. But we need to make the point, we're competing for capital. There's always a competition for capital. And that's the challenge, is how do we make sustainable projects and the transition to zero carbon the most attractive place on a risk-adjusted returns basis for capital to flow.
Let me jump in there, because I mean, we've got a situation where, I mean, if the German government is borrowing money today, the financial institute who's lending money is paying them interest every year, right? They have negative interest rates, right? So if you look and you say, well, why are you giving money to someone and paying them to take your money? For me, when I see that, that tells me that there's too much money and not enough opportunity. And and I do believe there is not enough opportunity in this whole renewable space. And part of the reason, if you look at Europe, is you're replacing an old system with a new system, and you have crazy things that happen when you have an old and you're replacing one with an old system. It is ultimately you have too much energy. That's what we have in Europe today. We have too much energy. Now, if you go to the developing countries, non-OECD, that's very interesting. There's not enough equity going there into these countries, right? They can get their hands on debt, but for projects, they can't do this. So yeah, China goes in and will finance Pakistan to build all these coal power stations. And I think we need to have very significant regulatory reform, particularly in the pensions area in the Western world, to allow that capital to not just be put into German bonds, but actually to be put into other areas, because their hands are tied a lot of the times through regulation. And I don't know if you've done any work in that, but I find that whole area of, as I said, insurance company and pension fund money, that's the money that needs to be really, really unlocked going forward.
That certainly, it's an area that our sister institute, the Impact Investing Institute, is doing a lot of work on, looking at how we unlock that pensions conundrum, not just for green, but for social as well, because clearly, there are a number of constraints around longer term investing where you would think pensions with its longer term investment horizon should be the obvious place to start to seek capital. Pleased to say that I don't know if it's made its way to Germany yet, but creating a bit of a buzz here is Richard Curtis, the film director, who's come up with a Make My Money Matter campaign. And this is, okay, well, it has global intentions. It started in the UK, but it's a fantastic idea, which is basically going back to the consumers again, explaining to the person on the street how one of the most impactful things that they can do to help with the climate breakdown is make sure that their pension monies are being invested in climate action and in the right things. Very few people appreciate that, they have agency where their money goes, and they can make sure that the asset managers are voting in a way that is aligned to their values. And it is, apparently there's some Norwegian research that shows it's 27 times more impactful to put your pension money into positive climate action than it is to give up flying. Maybe not in your case, Gerard, but to give up flying or to give up meat. So, this is a really important message that's, I think, going to drive some really interesting conversation at that consumer level and give a huge push to helping the pension funds move in the right direction on this.
Glad to hear.
That sounds like a really fascinating program. It hasn't made its way to Germany yet, so thank you very much for letting us know about it. Are there any results yet?
Make My Money Matter campaign was launched literally a month ago. Obviously, things have been a bit delayed due to the lockdown, but yeah, early days, but really a promising campaign.
I'm sure that Germans would get into that. I want to pivot here a little bit. Rhian, you talked about linking social, environmental, and government resilience. I want to bring in economic resilience to that. How can we link these four: social, economic, environmental, and government resilience in light of the COVID-19 pandemic?
Yeah, I touched on that earlier when, I mentioned the fact that as we come out of suddenly, as we look at the aftermath of COVID, it's a bit unclear when we're going to come out the other side until there's a vaccine. But as we look to the steps that we need to make to sort of rebuild our economies, it's becoming ever better understood that investment that is not aligned to a net zero future is a stranded investment. Yeah. And therefore making sure that we are fully focused that the pathways to prosperity are also the pathways to a greener future. That is something that is really starting to resonate, I feel, with the electorate, with the policymakers, and increasingly with the private sector as well. So what does that really mean? I mean, lots of ideas about, some of the bailout money being conditional. We've seen in Canada that bailout money is now, companies that take bailout funding are also required to sign up to the TCFD, the Task Force on Climate-Related Financial Disclosure. Certainly for some of the more fossil fuel intensive companies, I'd be very much in favor of seeing some sort of conditions in there regarding climate positive criteria, make sure they're on they have some commitment to get to net zero or a plan to get there. Similarly, investing in things like nature-based solutions, tree planting, energy efficiency of buildings, retrofitting homes, building infrastructure, all these are really labor intensive areas for investment that also require a lot of labor to begin with, but actually over time are very productive and require less labor intensive going forward, but obviously energy from clean energy sources, more productive, has real multiplier effects. So I think there's such a coherent story to be told here about how our way forwards can be green, but also can be prosperous, and really gets away from some of those concerns that Gerard and I were discussing earlier about green being seen that is something that is purely to do with consumers making sacrifices or investors making sacrifices. This is about a really positive narrative.
Gerard, I was also reading on your blog, you talk about not investing in the past. You talk about looking forward. A term that you use that a lot of folks are using these days is build back better. How does this link in with these 4 pillars of resilience?
Well, so what I'm firstly saying is investing in the past is investing in old technologies and businesses that are going to be under pressure because of climate change, right? For me, there's absolutely no point in bailing them out because they're in trouble anyway. But I look and I say, and I'm a technologist at the end of the day at heart, I look and I say, as a European, we have a great opportunity to build a sustainable society. Now, and I say sustainable society, that's resilient. So that means you need to have a resilient health system, resilient finance system, resilient energy system, resilient food system, right? They all connect together to me to make sustainability, right? And sustainable also is long-term, right? So you think of it in terms of a circular economy and all this. That's the world I want my kids to live in, right? And I think it's our responsibility especially those in the finance industry or in government or whatever, to make sure this happens. And I think the way to do this is, a lot of it is that there's an awful lot of barriers to change. And the question is, how can we remove these barriers to change? And I go back to this win-win situation. One of the beautiful things about the Green Deal going forward is that if you decide, okay, we're going to go and do energy efficiency in buildings and stuff like that, these jobs are all local, right? I'm not importing oil from Saudi Arabia. It's a local job. And this is the beautiful thing about any form of Green Deal. You can make it good for the locality and also at the same time do your bit for the world. Because I think the one strength we have as Europeans is that we're innovators. And I think it's also a responsibility of us to, listen, we can't change the whole world, but we can develop technologies and systems and ideas that enable other people to not make the mistakes that we've made. And I'm very positive about the future, because I'm also looking from the technological point of view and going, wow, there's amazing innovations coming out all around us, right?
And just to pick up on your point, another key part of the recovery must be investing in research and development, but also skills. It's education and training to address some of these structural unemployment effects, not just from COVID, but also from the fact that some of these industries of the past, they really do need to pivot. And we need to make sure that we have the workforce that have the skills of the future, not the skills of the technologies of the last century. So there's a huge opportunity now to be investing in making sure that we've got that workforce that has those right skills and expertise.
Yeah, and I would jump on that point as well. I think in Northern Europe, one of the risks around the Green Deal is that we don't have the people to be able to carry out the Green Deal, right? I cannot get a plumber to put in a new heating system for me in my house, right? This is, but it's not just Germany. I go across most of Northern Europe. You cannot get people of trades. And formerly trades were seen as, they working class jobs, et cetera, et cetera. They're not working class jobs anymore. They're actually very complex, because if I want to go and green my home, that requires someone that has engineering expertise, that has plumbing expertise, and some knowledge in and around digitalization. And they're the opportunities that I think we have for the next generation going forward to help these people develop the skills that are necessary to create these local and sustainable jobs.
I'm thinking about this. We had record temperatures on the weekend in Berlin, and it was hot, and it was around 32 degrees, 31 degrees in my apartment. And we escaped the city and went to some friend's house on the far west side who have built their own house, incredible standards of sustainability, and they have a geothermal system that brings cold water in and pumps it through the ground floor. And I thought, this is the kind of house that I would like to live in, and this is the kind of house that we need to have built. And I absolutely agree about trades. I want my kid to grow up and be a tradesman, because I think there's a lot of good that can come from there as well.
But you've beautifully illustrated the point that is not a straightforward engineering project, right? That is something that is that's going to require skilled labor to do that. And I'm not even going to share the horror stories I have of trying to get a builder to put some solar panels in for me here in London.
I know how you feel. I have similar stories.
Another day, dear me.
This has been a really enjoyable talk, and I want to make sure that you both have the time. If there's anything else that you would like to add, please.
I think the thing that I would add is that I always feel as a finance guy that a lot of people just say, well, it's all about finance. There's not enough money coming at this sector. I hear this constantly. And I want to say, again, that's not the case. And there's a lot of misunderstanding of what finance does. And ultimately, what finance is all about is most people in the finance industry are incentivized to make money or to not lose money. That's what they do. And we have to understand that, right? Around this time, it's all about risk and return. And I go back to, if you want that capital to move, what you need to do is, say you wanted to move from fossil fuels to a cleaner world, then you need to increase the risks around fossil fuels and increase the incentives in and around the new world. That's what we have to do. There's no way around this. So I believe that the one thing that's going to radically change and really push forward as an energy transition is a carbon tax, because that's what it does, right? And if I speak to the oil companies today, they are all in their heads going, why are they writing off their assets? Because they're looking and saying, if there is 2030 a carbon tax of $100 a ton, then we're in trouble. That's the assumptions they're already making, right? And again, that's very important, because long-term capital realizes this and isn't going to go into oil and gas going forward. It is not going to go into it. So that means it has to go somewhere else. But again, I go back to where and how, and because we have too much energy in a large part of the world. That's one of the issues that the issues that we have, I'd say.
Building on your point about the carbon tax, I'm in full agreement. I think the important thing about a carbon tax, as we look to, how are we going to raise some of the capital that we're going to need to repay this unprecedented amount of public spending that we have at the moment, and a carbon tax needs to be levied in a very thoughtful and considered way across different sectors, and importantly redistributed in a very important way that brings consumers with us, avoids the sort of gilet jaune spectacle that keeps getting raised. But we can use those monies not just to support the transition of some of these industries, but to support consumers and some of the most socially deprived people, help bring them out of fuel poverty, help retrofit their homes. There are a number of ways that we can think about this in a very considered way, and we have that opportunity to now. And I fully agree with your points, Gerard, about it's looking at the risk and the return, the opportunity and the potential stranded asset losses. It's both sides, and it's going to require this really careful balance of targeted public spending, very smart policy interventions to really stimulate private investors in private investment in sectors where cutting emissions is pretty complex. But none of it is unsurmountable. And it's really, I have great optimism that these conversations are really starting to happen in earnest, and that, more and more people are turning their attention and using their expertise to try to solve these issues.
Yeah, I think the last point I would say is my wish going forward is that the Green Party takes, in as many European countries as possible, the finance ministry position, the finance minister position. And I say this because they all tend to go and take the environment ministry, and they might try and go with the economics ministry or whatever. But the most conservative ministry is always the tax office, always, right? And that's where you make the changes, going back to the incentives that I'm talking about, right? We have to change incentives. And we need them to model the complex world in the future of what happens actually if you do put a carbon tax in and you reduce taxes in other areas. This is where we're at, and only they can do that. But they're not going to do it unless we force them to.
That's a fantastic final word. Thank you both so much for joining me today.
Thank you very much for having us.
Yeah, thank you very much. It was fun.
Ciao, ciao.
Bye, have a good day.